Good morning. This is Larry McMillan with the stock market update on Monday, May 10th. So on Friday, the S&P broke out to another new all-time high, accompanied by the Dow, and those two indices are continuing to lead the way. The Nasdaq Composite and the Nasdaq 100 are somewhat behind, not terribly behind, and the Russell 2000 is behind even that. But the strength is in the big cap stocks right now, and the market is strong, and the chart of the S&P is very bullish. So we remain bullish in that regard. But let's look at some of the other indicators. First of all, the McMillan volatility band sell signal confirmation did not come in, and it's beginning to look like it won't now. So probably the next move there would be for SPX to go above the 4 standard deviation band and set up another sell signal somewhere down the road, but not necessarily immediately. The equity-only put-call ratios are on sell signals. Sell signals from these extremely overbought levels just haven't worked that well in the last year or so, maybe even a little, well, just about the last year, I guess. And that's basically because the call buying is just so rampant that it's distorted the ratios to an extreme extent. So the buy signals have been okay, sell signals not so much, but we are still counting this as a sell signal and not ignoring it. Ignoring sell signals when the market is this extended to the upside is not a good idea. In any case, breadth has improved. Last week, New York Stock Exchange breadth was pretty good all week, but stocks only breadth had given a sell signal, and now that's been canceled out. So we did not take any negative position there because the two indicators did not both move to sell signals, and now they're both in overbought territory, trying to move higher. As the S&P itself makes new all-time highs, breadth should be expanding into extremely overbought territory. That has not been happening for the last couple of months, and it's a little bit worrisome, but not enough to really act on. New 52-week highs have exploded. New York Stock Exchange and stocks only data both are showing some of the most, on Friday, showed some of the most number of new all-time highs in a single day in years. Such was not the case for NASDAQ, but still the other two are dominant there. Volatility has remained fairly low. VIX is still trading in the 16 to 20 range, where it has been since the beginning of April. As long as it's in that range, stocks can advance without any problem. In fact, I would expect that since realized volatility is down at 10, again, VIX is probably going to be heading more towards that neighborhood. I wouldn't expect to see VIX at 10 because there are still some worries left over from a year ago, of course. But VIX is still in a sideways to downwards trend, and that's bullish for stocks. The construct of volatility derivatives is also bullish in that the VIX futures are trading at a premium to VIX and the term structure slopes upwards. So all in all, this is a very bullish picture, as it has been for a while, and we therefore continue to retain a core bullish position. We will roll strikes of calls up as the index or whatever stock that you're in advances, and we will tighten stops, but we are maintaining our long positions. If sell signals do arise, as in the put-call ratio, then we take a small bearish position alongside the core bullish position. We would only be concerned if SPX started to break support levels. The highest one of those right now is 41.20, and that's been tested several times, so it doesn't appear imminent that that support would break. So all in all, pretty bullish outlook. I invite you to come to our website, take a look at our newsletters. We're doing well again with speculative positions to the upside, and in the Option Strategist newsletter that just came out on Friday, we have some pretty interesting volatility-based quasi-straddle positions that you might be interested in as well. In any case, good luck and good trading.